Hi guys, and welcome to the Atlantic Super Trader Education Weekly Market Update. So let's go through and have a look at the broader market analysis of the Dow Jones. So after the election last week, there was a good opportunity of buying back in, but after Obama basically got elected, the market just tanked to the downside. Okay, looking at a bigger picture of things, we have a primary uptrend, so the market is still in an uptrend whether we like it or not from that low. Okay, so we have also that low right there. I'm gonna do and input that. Okay, so in terms of the shorter time frame, medium term, on the secondary uptrend, that one's got basically got broken, and it has some, despite an uptrend, but it also has certain demand levels that it has to break. Now the secondary uptrend got broken, and we have a lower low at this point in time from a higher high, lower low. Then the next level should be a higher high before a lower low. The odds and probability that it may continue to drop somewhere sometime in the future is all the way down here, all the way to about 12,500 of the year 2013. So if you can just imagine, you're going to go from here, it's stabilizing itself, correction. So you're going to create a lower low, lower high, lower low, and then rebound. And in 2013 it can continue to go and create a continuation to the upside. Now my caveat is that as long as it doesn't want to break the 12,005, 6, even over here a really good level of demand, approximately 12,004, then we're pretty much still on the safe side. And if not, then the whole uptrend will be broken. It can continue all the way down to 11,000, 10,070 and break through this major low, and then we'll basically pointing back to all the way to 10,000. That's with those conditions, obviously. But from here, nice big bearish bar from last week. The bears were in control, back in a good level of demand at the moment, right about the 10,750, stabilizing itself. Then if it chooses to, it's going to try to correct itself. However, let's also go through and have a look at certain retracement levels from that major low all the way to the high right there. If you notice, it is sitting on the 50%, which is also a really good level of demand. If it doesn't want to, then it has to come back all the way to the 62, approximately around the 12,650 area. And if it breaks, then boom, back to down to about 100% around these levels, with a condition that it breaks through the 62 all the way down to back to zero, around the 12,200 around this point. Okay, now, but because such a big drop for the past 1, 2, 3, 4, 5 weeks in a row, we also need to have a quick look in terms of from the last high all the way to the last low, that if it chooses to retrace itself, then it has a potential retracement all the way to 13,046, 13,086. So at least there's these levels right here and the level of supply that can retrace to even all the way to 13,200. Then after that it will make a decision to continue to drop to the downside, and it will look more like this. So in other words, when the Christmas rally happens, odds and probability that it may continue to go up to around the 13,002, all the way over here even, by first week of Jan, middle week of December all the way to the end of December, and then we'll create stabilization and it will come back all the way down. Okay, so very short term bullish to the upside in my own perspective, stabilization, correction, continuation to the downside if it chooses to drop, since secondary uptrend basically got broken. So we have this whole empty space that it needs to fill in, the market doesn't go in a straight line, has to correct itself before a continuation to the downside will occur once again. Alright, now that's medium term. Longer term, still very bullish. Medium term, medium to longer term is mainly around this level, heading to the downside. Shorter term to medium term, then we have a bullish area, back in the level demand, correction. Now on a very short term perspective, you can see through here. Now today we have a higher high, lower low, stabilization, hence that makes sense as part of the doji. Okay, now it can continue stabilization, correction before a continuation to the downside. That's if it chooses to do that. Alright, that is it for my weekly market update for today and for this week. I hope you enjoyed it, and thank you for those who bought my book. Thank you for your support. But if you haven't, and if you're new, please feel free. My whole purpose is actually to that I created the book is for the self-awareness for all traders, from a newbie who wants to learn how to trade all the way to the advanced, that there's a certain process in terms of trading, and that process is about the self-awareness, and mainly more on the mindset. And I wrote the book specifically coming from an athlete's perspective. It is not theoretical based in terms of a mindset type. It's more a practical, fully experience type of experience. So once again, it's a different. It's been written differently compared to other self-awareness or trading psychology books. Alrighty, guys. Thank you very much. Take care. Till next time. Happy trading.